I guess one of the things that I see coming out of this, and it will be months, if not quarters, until we really see it, is regional banks, which is where the pain is, perform a very valuable function in their markets. They are 50% of total transactions for commercial loans. That is going to stop, at least in the short term, if not longer. And I think that's going to have ripple effects across many assets that are traditionally financed by commercial lending. What do you think?
Depends on the bank. So the healthy banks, they're still out there because they have to make money.
Yeah.
So, these banks are in the business to make money. Now, what's going to happen is the rules of the game and how they make money are going to change.
Yeah.
But believe it or
Regulation.
not, the local, the smaller local regional banks that are more diversified into businesses and real estate in their area
Okay.
are actually better off than SVB was, or than even a JP Morgan and those guys are.
Okay.
Even though those banks are too big to fail, doesn't mean they're healthy. It just
Mm.
means they've got a guarantee that they're not going to fail. So the little banks that have their money all around now, the ones that are at risk potentially are the ones that have office loans and things like that. I mean, pretty much real estate all across the country is underwater, especially commercial. Commercial multifamily. I mean, none of it's worth what it was a year ago
Yeah.
or 2 years ago.
Yeah.
Some residential in some areas. My area, we're still seeing multiple offers and stuff going above asking. I mean, we're still seeing that nonsense because there's
Yeah.
no
This is
inventory.
not a this is not a residential problem. This is a commercial financing problem.
And that's the second shoe to drop. So everybody's like the banks, and it's neat, and it's in the headlines and all that. The banks are for the most part okay. The Fed, Treasury, they know how to deal with it. It's not going to be anything like 2008-9 for this. The big issue is what you just said. It's the shadow banking. So the biggest risk on banks, balance sheets are commercial portfolios, commercial loans, maybe some business loans with some businesses that are under stress, but they've worked through most of that through the pandemic. The ones that are left standing are generally solid businesses. Commercial real estate is in distress, especially in the office sector, but all assets are underwater. There's going to be a lot of disruption there. And then, equity funds, hedge funds, sovereign, debt funds, pension funds, all those people that lend in the shadow banking industry and create liquidity that's the biggest shoe that potentially is yet to drop.
I agree. The shadow banking, the non QM, non qualified mortgage, these other lending functions that their job is to lend, package up, sell. It's going to get tough.